Well, we've got a couple of earnings out of Africa today, but let's get more details first on I&M, which is, of course, one of the largest banking group in East Africa. Two of the executives spoke today at the Facts Behind the Figures presentation at the Press and Investors Forum held in Nairobi to put some facts behind the latest numbers. Let's listen to them.
Very good first half of the year. Our revenue was up 21% and our profit before tax has increased 31% year over year. Including our other Kenya subsidiaries, which is Bank Assurance and I&M Capital, where we have a wealth management funds, revenue was up actually 22% and profit before tax was up 32% year over year. So very pleased with our financial results. Customer deposits were stable, so we're pleased about that. Slight reduction in lending, given the economic environment we're operating in. Very pleasing to see our cost-income ratios come down significantly year over year, and we've had very good positive jaws. Revenues growing much faster than our cost in Kenya. Our cost of risk is largely stable. Our net NPAs have come down significantly and much lower than the industry average that we're seeing from the Central Bank of Kenya data. And also our return on equity as a result has improved significantly. Overall, our customer base in Kenya, you can see we've had massive growth in our customer base over the last 2-3 years, and that's continued to grow. We've had 25% increase in our customer base year over year, increasing from 451,000 to 562,000 customers. And what's pleasing is our customer experience levels have held up very well. Actually, they've gone up. As you can see, our Net Promoter Score is at 81% for this first half of the year. This is even more pleasing given the massive increase in our digital transactions on our platforms. So you can see for Q2 2025, we had nearly 13 million transactions on our platform. First half of 2024, we had 6.6 million transactions. So nearly 100% growth in our transaction volumes year over year. We've continued to invest also in our physical presence in Kenya. You can see we're now up to 24 counties in Kenya, over 64 branches now, and we're continuing to invest in our branch channel and have a nationwide presence. Looking at the segments now, our corporate institutional banking business has been doing really well, continues to grow. We've had strong growth over the last couple of years in our corporate institutional banking revenue. CASA has increased over the last couple of years, as you can see, from 22 billion to 43 billion. Slight dip compared to last year, where we did a lot more of the government-to-government oil LCs. This year, there's more banks who are doing that. On new business initiatives in corporate institutional banking, we're targeting. We're always looking at new initiatives in our corporate business. So now, 16% of our corporate institutional banking revenues is coming from new initiatives. These have been, as Kihara alluded to, focusing on oil and gas, leasing, and public sector. And we're very pleased with the results of our corporate institutional banking business. We continue to have a leadership role in trade finance in Kenya. Our market share increased last year to 9.9%, where this is off the Central Bank of Kenya data. We're waiting for this year's results, but our volumes have held up very well this year as well. Thanks. In our retail banking business, which obviously, as you all know, has significantly grown our brand and product relevance in Kenya over the last few years. So our income has grown. You can see our retail banking current accounts, savings accounts, balances have increased significantly. Year over year, we're up 26% in our CASA balances. You've seen the customer growth, like I said. We've had 25% growth in our customer base year over year, largely driven by retail. We also are pleased to see that our lending to the retail segment, the MSME segment, has really increased over the last year, especially. This is being driven by agri-lending, workplace banking lending, and on our investing in our digital channel on our app, where we have our short-term digital loan products. So we've had really good growth in lending to the retail segment. What's also been very pleasing is of this 110,000 customers we've acquired in the last 12 months, a lot of these have come from the MSME segment. So about 30% of our new customer acquisition is coming from MSMEs. You recall we have Nisare Kabisa, which is the free bank to M-Pesa for retail customers. And then last year we extended that to small businesses, sole proprietors. So we've seen a huge spike in small business owners coming to I&M Bank.
To take you through the rest of the subsidiary financial results, maybe I'll start with something that Kehara just showed us, that the subsidiary contribution is 24%, coming down from 26%. So what does that mean? It shows us how balanced our growth has been and how strongly our Kenya performance has been. So you'll see what Google slides did tell us, that Kenya subsidiary profit is growing 31%. But then we are seeing balanced growth across all of our other subsidiaries. And therefore, in as much as Kenya is pacing that fast, we are seeing then the other subsidiaries pushing back to defend their share of their contribution across the group profitability. So Kenya, 31% growth, cost-to-income ratio of 39%. And that is on the back of the significant investments that we are making in our digital capabilities, in our branch capabilities. So we have invested and we are taking that cost on and still being able to deliver an efficiency of 39%. Now, something else that will be overarching is the regional economies. So you will see stable currencies in Kenya, in Uganda, in Tanzania as well. Tanzania, we did have a bit of volatility, but all within single digits. The only country where we are seeing a bit of depreciation, but again single digit, is Rwanda. So you will see that. Then the other thing is where central banks are with their central bank reference rates. They are all, again, in the single digits, I think.